Good afternoon, ladies and gentlemen. It's my pleasure to give you the full year results and the last quarter results for Motherson Sumi Systems. We've hit the highest ever quarterly revenues of 15,282 crores, which is up by 38%. Q4 net profit is at 590 crores, up by 24%. Highest ever order book of 1.3 lakh crores, approximately 17.2 billion euros. With this, we are ready for the questions and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kapil Singh from Nomura Securities. Please go ahead.
Hi, sir. A few questions. Firstly, on if I look at the standalone margins, there's a bit of an impact visible. So, is it because of lead lag between commodity price movement and the correction that you will get from customers?
Thanks, Kapil. As you are aware, yes, that is one thing which is part of the business, that it becomes cyclical. The second part, of course, you are aware that how the copper price has moved in the last 6 quarters. So having said so, if there is an increase in the copper price, both the sales value and the raw material cost go up. The value addition from a mathematical equation point of view, the EBITDA margin will look bit lower. But surely there are lags in a copper price settlement which will also impact. Of course, at PBT level, as you are aware, last year we had a extra income because we had a surplus fund which got deployed on 27th March in acquisition of PKC. So until then, we had an income from that.
Sir, the revenue growth for the business is pretty strong. So how much is the impact of this from copper prices for the quarter? What I'm trying to understand is that is the industry growth at this rate in the range of 20%, or is Motherson Sumi gaining market share?
Kapil, this is Pankaj here. In our results, we are not manufacturing only one component, so we are supplying many different parts to the customers, and our revenue growth is also on the enhancement of the content per vehicle, as we always inform. So the industry growth has been much, much less than our growth. And as Mr. Gaba explained, that some portion of the growth definitely is also because of the raw material prices which have come.
So when you say industry growth has been much, much less, that is the wiring harness industry or the OEM industry you're talking about?
I'm talking about the customers to whom we supply. If you will look at the passenger car market growth, then it is not 22%. We supply mainly to passenger car market, and we are also doing very well in the commercial vehicle segment, which has seen a much higher growth than the passenger. If you look into.
Okay. And how much is the contribution from commercial vehicles?
We have grown, if we look at the delta growth in commercial vehicle, it will be as a percentage quite substantial for us as to what we were supplying earlier and what we have done in this quarter, because there has been a good growth in commercial vehicles, as well as we set up more sites for commercial vehicle makers, as a lot of changes are happening in that industry and the customers wanted us to be there. But in terms of the total pie, the commercial vehicle segment in India is not significant, not very big.
Okay. And two more questions I had on the international piece. One was on PKC. We haven't seen any margin. Margins have actually come down from where they were. So, is there any one time which you mentioned last quarter? Is it there this quarter as well?
Kapil, I don't know from where you compare that the margins have come down. I think it is important that when Motherson walks into any company or those, there are the benchmark is set for an accounting disclosures as well as accounting treatment. But steadily, PKC has been improving its performance. The performance in North America and Europe has been quite good. On China, of course, that is a growing market. So overall, PKC performance has been far better than it was there, since now we have a larger insight into the business compared to what it was earlier.
So what I was referring to is the EBITDA. If I see EBITDA, for last few quarters, it was, in the range of 20 or 18 million on a lower revenue base. So, revenue base has gone up, but EBITDA hasn't grown. So that's what I was trying to understand. And if I look at the EBITDA margin, it used to be 7.5, 8.5 in that range, which is currently 6.2. So just trying to understand if there is something which is, undergoing any change over here.
No, of course, the copper price and will also have a larger impact there, because the copper content in a heavy vehicles industry is much more. But at the same time, there has been a more steady improvement, so you have to see as the things more come.
Okay. And lastly, on the startup costs, this quarter we have seen some increase. So can you give some indication as a trend when they will start to come down, or when they will become zero?
See, as we have disclosed earlier, these are the startup costs for the 2 plants only. So in all the plants or the new facilities which are built across the globe, we do not classify. We take it as a part of the normal business expenditure. This also we take it as part of normal business expenditure. So when we are talking about EPS or any results, we are talking about after charging these costs. But at the same time, there was a request from some of people like you who wanted to know, when we are building these new plants, what is this? So these Hungary plant, as we have said, will begin the operations from this quarter. So no more you will see a startup cost attributable to that plant being reported as a separate memorandum listing, because the revenues will start coming up from that plant. Now, what will be the result of that? That we will disclose as and when we go in a consolidation. And the other plant at Alabama has been inaugurated in last week of April, and as per the schedule from the customer in a phased manner, we start the serial production on a commercial basis from the third quarter. So you will see that our disclosure on these 2 plants on the startup cost will not be there.
So that's very helpful. Thank you. Thanks a lot.
Thank you. The next question is on the line of Amyn Pirani from Deutsche Bank. Please go ahead.
Yes. Hi, sir. Thanks for the opportunity. My first question is on SMR revenue growth. We have seen this for the full year as well as in Q4. That revenue growth has been, quite low for SMR. So, what I'm trying to understand, is there some timing issue from the new orders when they start to kick in, or is there a problem in the underlying growth in the, car volumes for your customers, which is driving this lower growth for SMR?
I think what's important for you to understand is we have multiple verticals. Motherson does not believe in buying the top line. So we are taking all the orders that are coming to us. Car models are dying, new models are coming up. Whatever be the case, the growth of SMR is also a little bit impeded because Hyundai and Kia are a little bit under the weather.
Okay.
That's a part of life.
Right.
But we will not sacrifice our bottom line just because we have to show you growth in SMR. Our job is to give you a growth in Motherson Sumi Systems Limited. That is the company in which you have the shares. So, time and again, people tend to look at all the verticals and then want growth in each one of them and growth on each one of them. So I fail to understand where did Motherson go wrong in its communication. We are trying to tell you that we are going to be, in 5 years, we're going to be here, this is our growth, and we don't individually give it. We only give this particular numbers to help you to understand a bit of what's happening inside our group. So I'm very clear that we will not pursue the top line. As you know, top line is vanity, bottom line is sanity, and cash and bank reality. But look at the bottom line of SMR. Isn't that wonderful?
No, so point taken. It's just that the expectations are set, for all the verticals. And sometimes it is helpful that, if you're telling me that Hyundai is not growing, so, it's nothing to do with you. So it's helpful.
I'll tell you something. What is happening is there are different things happening all over the world.
Yeah.
So we can't really we are not in the aftermarket business. We're in the OEM business.
Yeah.
OEM, you are aware of what is happening. Every car sold, you have the numbers.
Yeah.
So you can yourself see that there is a weakness in China for political reasons or whatever. I do not know what the situation is. But we have to respond to what the market is saying. So I'm just, nowhere have we said, in our history, nobody can tell us, we have said that every vertical will grow at 30% and the growth will be.
But Chantak, what is good is that the operating performance has only improving. So there are inflationary pressures, there are cost downs given to the customer. So the team is doing a great job by keeping.
Absolutely. We are very happy with what SMR is doing. I think they are exemplary role.
Breathe with the market.
Yes, you have to.
Sure, sir. And just one question on the accounting side. Your share of profit from associates has been coming down. Is there something, some entity has become a subsidiary? Is something that we're missing here?
I think we had given some details in the earlier conversations that one of the joint ventures, CIFA, from 1st January last year became our subsidiary.
Okay.
So that has moved from a associate to line-by-line consolidation.
Okay, sure. Thank you, sir. That's helpful. I'll come back in the queue for more questions.
Thank you.
Thank you. The next question is on the line of Hitesh Goel from Kotak Securities. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, first question is, if I see annual results on console side, there is an increase in amortization from 22 crores in FY17 to around 296 crores in FY18. Can you please explain that?
Sorry, which one?
There's a item called amortization, right? So if I look at amortization expenses increase quite significantly from FY17 to FY18. So just want to understand what is it pertaining to?
Yeah, thanks, Hitesh. I think what you might be aware that we have acquired PKC on last year-end, 29th March or so. And as per the valuation done, we have intangible assets or the goodwill. So the intangible assets amortization is being done at 47 crores per quarter approximately. So that is also disclosed in each quarter number as well as in the last year annual report. So that is the incremental amount which is coming from here.
Okay. So it's basically the R&D amortization that you're taking in the P&L for PKC.
No, sir. It is not an R&D. It is a non-cash item. When we have acquired PKC at 571 million euros plus whatever was the net debt, the valuation is done on the assets of the acquired entity. So there is a method and which is fully described in the notes to last year balance sheet. And so whatever goes into intangible, that is being depreciated over a lifetime. So it is kind of because while we have considered this as a part of acquisition cost, but yet we are writing it off over a period of time to the P&L account.
Okay. And sir, my second question is related to the order book. If we were looking at the order book run rate. If I look at the new order wins, basically in FY15 it was 2 billion euros, and then 16 at 8.8, then 4 billion, 4.7 billion FY18. But when we see basically the incremental revenue flow in SMRPB, it has been static over the last 3 years. So, and also now your top line has increased quite a bit on the SMRPB front, but the new order winning is static around 4 to 5 billion. So how should we read this? Because it's becoming very difficult to analyze this.
Mr. Goel, the thing is that this is dependent upon which car model is going through what cycle. Really, I can't. We are just giving you what are the order wins that we have. The rest, why more models are not being pursued by the car makers, really, it would be very difficult for me to answer that question. But from our side, yes, you can read whichever way you like to, but the basic orders that we have not supplied, not even one part, are today at the highest ever, of 17.2 billion euros.
So, sir, can you give us some guidance on, depending on current visibility, what is the kind of safe revenue growth you can do in SMRPV for next 2-3 years?
So, just divide 17 by 2 after a year or so, and that's divided by, say, 4 or 5, and you have 4.5, 5 billion coming every year onto the top line. Something like that. Assuming that, as you're saying, we will not get new orders, then that would be definitely for the next 5 years, but 4 to 5 billion, 3 to 4 billion.
Okay, sir. Thank you.
Thank you. The next question is from the line of Bharat Ganani from BNP Sharekhan. Please go ahead.
Thank you for the opportunity. So just one question to Mr. Sehgal. We have been hearing a lot about the advent of electric vehicles, especially not in domestically, but in the markets of developed markets of Europe and US. So my question is while I acknowledge that the SMR business would not be impacted at all with the advent of the electric vehicles, but I just don't have clarity on what impact it will have on the wiring harness segment, which is amongst the highest profitable segment if we see the profitability margins. So just your comment would be really helpful, Mr. Sehgal, on that.
Definitely, electric vehicles, because the electric vehicles operate on a 72 volt, 200 amp environment, the wiring harness cost for at least the power circuits is going to go up tremendously. But it's your call against, it's a bet that you can take. As far as we are concerned, we are agnostic to it, but yes, all our divisions will actually benefit because the interiors, the exteriors have to be lighter, but yet have to be stronger, and the wiring harness content will go up. Pankaj, you want to add something on that?
Yes, I think, not in this Auto Expo, but the previous one to this, we had also displayed all the technologies related to electric vehicles, and also in the investor meet which we had conducted, we had displayed. So we are already supporting the customers, not only in India, but outside also, even our CV customers and for the buses. So whatever volumes are there, the volumes are not much. But whatever the customers require from us, we are there. And of course, as Mr. Sehgal mentioned, that these are very big cables and very big connection systems. So definitely it offers more opportunity for us in terms of the value add as well as the overall.
Of the top 10 selling electric cars in the world, I think last month we were told 6 of the top 10 we are already supplying. So that's the opportunity, but the numbers are still negligible. So it's your call against whatever you think is the guys who are guiding you. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Puneet from HSBC. Please go ahead.
Good evening, and thank you for the opportunity. Gopaji, just wanted to clarify this. The amortization is for the intangible asset. Is it right? Did I hear it right?
Yeah, that is correct.
So what happens with the goodwill? Is it when it was tested for impairment, was it impaired at all in this year?
No. I mean, the profitability, the revenues have only improved. So when we acquired PKC, it was 840 million business.
Yeah.
Today, we have already crossed $1 billion, 1.04. So in first year itself, you see that kind of a growth.
When we talk about timing, I think the timing of Motherson Bank, it was fantastic.
No doubt about that. Okay. Secondly, just on PKC again, I couldn't quite, catch the revenue number from the presentation, unfortunately. So if you can help me with this quarters and previous year's last quarter's revenue number.
Yeah, actually there was some problem with the color scheme, so we have changed that and we have uploaded on the website. For the quarter, it is 275 million euros, and for the full year is 1.043 million.
And last year?
Last year, PKC, because it got, we made an offer, it got delisted kind in between. So it had an option to disclose 6-month result. We had disclosed the first quarter result. I will have to go back and check. But since the January to March quarter had a lot of other things, so we did not really make a comparison. It would not have been like-to-like comparison. And PKC, as you would have seen, they were putting a lot of cost into a NRI, non-recurring items, or they call it items which affect comparability. So we did not want to get into that discussion. So we are focused on what the numbers are, and that is where I said we have to raise the bar.
Okay. Just in some sense on the growth that would have come, would it be fair to assume third quarter growth on revenue would be similar to what you saw in fourth quarter?
Yeah, should be similar, but I will, you can get that or we can take that offline and I can ask somebody to give me those numbers.
Okay, fair point. Just lastly, you had, two plants that were supposed to commission for SMR. Did that commission in fourth quarter? The Incheon and one in Hungary expansion.
They're both going on, and in the meantime, I think in the next quarter we will give you an update on all the this is, so really we haven't checked, but the paint shop was coming up in Incheon, and I don't that's done, but is it already disclosed?
But we will
last year.
Both the paint shop for customer approval and all.
Yeah. So I think last quarter there was a discussion on that, but I really don't know what the status is. Is it okay if we can give you next quarter? If you want it now, then...
Sure. No, next quarter is okay, but just if you can update on the big Hungary plant which was supposed to commission in 1Q. Has that commissioned or is June likely to be the month?
That's SMP, that's not SMR.
Yeah, SMP. So I'm moving from SMR to SMP.
You're all getting confusion because SMR, there is a paint shop only that's happening.
Yeah, I get that. So SMP, which was due for first quarter, I know one quarter is not over, but still.
No, still going on. Still going on. See, I'll tell you something. What happens is there are multiple cars, multiple colors.
Yeah.
So the car makers want every color to be homologated and tested. Otherwise, you'll have a car going to cost you $40,000-$50,000 with the bumper color a little bit different from the main body and the mirror looking different.
Yeah.
So they take it very seriously, and all of us have to make sure that they are completely at ease. So the testing and the homologation takes a long time. So that's why these plants sometimes take time.
Okay. But you should start recording the revenues from this plant by June. Okay.
As per the launches of the customer, we have two customers there.
Of course.
You already said that we will not be taking this. So no startup cost will be shown of Hungary anymore.
There will be EBITDA.
The actual EBITDA, whatever it is of that plant. So there will be no startup cost for Hungary plant anymore.
Okay.
That's what Gauba said.
Okay, that's great. That's all from my side. Thank you so much.
Thanks.
Thank you. The next question is from the line of Mayur Parkeria from Wealth Managers India Private Limited. Please go ahead. Mayur, your line is unmuted for questions. Please go ahead.
Hello, am I audible?
Yes.
Yes.
Yeah. Good evening, sir, and thank you for taking my question. Sir, on the SMP side, are you happy with the progress in margins which is happening, gradually as more plants come in place, subject to the, even if you remove the startup cost, the core margins, are you happy with the way it is coming up, and what's the outlook there?
So, see what is important for you to understand. 3 plants of SMP are probably the largest of the plants of SMP, the greenfield sites. Together in 2019, they will be adding 1 billion euros to the top line. Today's listing of SMP is about
Yearly 3.4.
What's the number today in euro?
In euro, for the full year we did 3.4.
Yeah, so we're doing about 3.4 billion. This will add another billion onto the top line. So you can understand it's about a 25% impact onto the top line. So definitely the same things are happening over there. The margins are only going to get better. The ROCE is going to get better. And definitely we are very happy with all the work that they're doing. It's very hard work. And to have that confidence of the customer is very enriching, is very, very good.
Sir, I understand you may think I'm harping a little more on this, but from the operational side, it's a satisfactory performance. But from a financial perspective, given the performance, means we are still the ROCE is much lower than what we are earlier used to expect it. So, given
Mayur sir, the point that I'm trying to explain on SMR side, I'm also trying to explain to you on SMP. The object of Motherson Sumi Systems is to give a top line and to give you a bottom line of 40% ROCE. Sir, I am not in a position to give every company, every unit, the kind of expectation that you have, sir. Do you understand my point, sir?
Right, sir.
My job is to give you in Motherson Sumi, sir. You're not a shareholder of SMP, sir.
Sir, we are a shareholder of all the companies, sir.
Yeah, so exactly. So then Motherson Sumi Systems is where the results are going to come. And we're looking at the results of Motherson Sumi. Definitely, all companies, all components are not going to have that kind of ROCE as what your imagination is. I wish I could come to your expectation. I'll be that much more, enriched. But that's not what my job is. My job is to keep on giving you a continuous growth around 30-35% every year, to improve the ROCE closest to 40% as much as possible. That's our whole job. So sometimes some particular company, new plants are coming, new orders are coming. All these particular things have to play out, sir.
Sir, last question from my side is, sir, now that only 2 more years are left, at the Investor Day, we've already seen a trailer of FY25, which you are planning in terms of the 5-year plan. But just in case of a FY20 plan, 5-year plan of 18 billion, how optimistic you are to reach that, and do we see any risk on that side?
Sir, the plan is not 18 billion, sir. The plan is 18 billion at 40% ROCE.
Yes, sure.
So my job is to deliver to you that. Both of them are the targets, sir.
So that is even your understanding means we did not even think that ROCE is an out of question. It is obviously with ROCE. So I'm saying.
No. So just to set the record right, because then you will tell me, sir, on this day you said you only talk top line. I'm just telling you the top line and bottom line have to go together. So if you look at the whole situation, you will see that we are absolutely on track. We have virtually no doubt that we will achieve our targets. God forbid if we can't find any asset which delivers totally, Motherson Sumi cannot deliver 40%, we'll come back and apologize to you. But the last 20 years, we've gone through this multiple times, and every time with God's grace, we have been successful. So it's up to you. You want to back us or not back us? That's your call, sir.
Thank you, sir, and wish you all the best. Thank you, sir.
Thank you, sir.
Thank you. The next question is from the line of Chirag Shah from Edelweiss Securities Limited. Please go ahead.
Thanks for the opportunity. Sir, I have a question on India business. So, sir, between the wiring harness and the polymer business, over the next 3 to 5 years, how should one look at the opportunity size? Why I'm asking this is keeping in mind the new emission norms that are likely to come across, and also the fact that in wiring harness, we have a very dominant market share. We are virtually there with everybody. And in polymer business, we have a scope to scale up our market share to the wiring harness level. Is it that over a long term, polymer business can grow at a much faster pace in India versus wiring harness?
Good question, Mr. Shah. The thing is that wiring harness, of course, when we kept saying that we are not in any trouble on market share and all that, everybody insisted that we are having trouble and competition. But anyway, thanks for acknowledging that we don't have any issues now on the wiring harness side. But on the polymer side, you see what is happening is, for me, Mr. Shah, it's a very good question, because the cars today are going up the value chain. People are wanting better interiors, better exteriors. There are more and more sensors that are coming. There is more and more, touch feel factors are improving. If you look at any auto show, you will see that whenever they are recommending a particular car, they're telling you what the leg space is, how the interiors are, how the ambience are. So you're very right. The plastics and the interiors and the exteriors, and including the ambience inside the car, are getting better and better, and will keep on getting better, because as people will aspire more, they will want more. So we are very, very excited with what the new car makers are asking us to do for the interiors and exteriors, especially in the plastic side.
And sir, second question was on this cost pass-through, the copper price jump. Generally, it is a quarter lag that happens, or how should we look at it? If say copper pricing and commodities stabilize at current level, hypothetically, we are able to pass it with a lag of a quarter, or a slightly longer lag?
About 3 to 6 months, Mr. Shah.
About 3 to 6 months.
It depends on contract to contract. In some it is 3, and in some it could be extending.
And some it goes even to a year. So we can't say anything. There are some customers, we don't want to name them, they go to a year.
Yeah. And sir, just last update on, so we were looking to expand MATE and put up a facility in Europe, in Hungary. So
yeah.
Can you, and we had, in the Investor Day, we had indicated a very ambitious plan on the MATE, the opportunity size. So can you share some update over there? At what stage we would be in that sense?
I don't have the thing over there, but it's almost 60% complete or something like that. Next quarter we will give you an update on that. And definitely the Radel, this thing is going to be working together with MATE. In fact, it's not going to be working together with SMP, it's going to be working together with MATE. As MATE and Radel are on the interiors together, even in India, they have Radel has plants. So definitely we are absolutely moving on that direction, as what we had told you in the investor conference, please.
And the MATE facility in Hungary was supposed to be operational in Q1 of 2018-19. So it's
we've just got the last year this thing. If you look at it, on page 27, it says operational on quarter 1, financial year 18-19.
Yes, sir. Yeah. And sir, just an update, follow up on Radel. So, at what stage are we in the process, and when can we expect the closure and all the?
We've got a lot of the approvals. Some more countries, the approvals are required, and those particular things are done. And see, what happens is that you have to file up in those particular languages. So the lawyers in Russia and Korea and all the different countries where they are, we are filing up in those particular languages. But the good news is that most of it is almost done. So maybe another 2 months we should be able to...
It's going as per the schedule.
As per the schedule, yeah. So this is helpful. Thank you, sir.
Thank you.
Thank you. The next question is on the line of Rajat Mehta from SBI Mutual Fund. Please go ahead.
Yeah, just a question on your order book.
Mr. Mehta, we are unable to hear you, sir. Can you be a bit loud?
Can you hear me now?
Yes, please.
Yeah, just a question on the order book. If I look at your second quarter presentation and even the fourth quarter, you seem to suggest a start of production of about 1.9 billion euros and a fresh inflow of about 4.9 billion euros. So when you declared the last year's closing number of 12.9 and this year's closing of 17.2, there seems to be a gap of about 1.4 billion euros. I mean, if you knock off whatever the SOP is from the order book itself. So could you explain this gap, if there is a gap?
I think we had explained when we disclosed first half year results and this order book, because there was a revision in the volumes or the values in the customer. So let's look back in the presentation. We had clarified at that point of time.
Fair enough. Thanks.
Thank you. The next question is on the line of Sahil Kedia from Bank of America. Please go ahead.
So thank you for this opportunity. Just one question from my side. Given that you have new orders that you have received, would this require additional investments, or the current plants that are coming up should be able to take up this incremental order that you have got?
Thanks, Sahil. But as of now, there isn't any anticipated new greenfield sites for this. Also, if I can just from my memory, I'm telling you, in the meetings that we had, we have some interesting capacities in the acquisition that we are doing, and a lot of that is going to also be used. Those particular plants are going to be used. But these are all on the work stage just now. First, we have to close Radel. Once Radel is closed, we will again be redoing it. But even if we do set up, it will probably be a very small investment. It wouldn't be a big one.
So from your answer, sir, I presume that bulk of this incremental order is therefore in the interiors business, because obviously only then would it make sense from Radel sharing. Is that correct?
No. What I'm trying to put forward to you, that in the existing plants where we are, and possibly some of the Radel plants, because they're in different locations from us. Mm-hmm. So we are now, the people as we speak are working out what can be supplied by what, and how we can do that, because at the end of the day, all the companies are owned by SMR PBV. So in that sense, we will use it to maximize the production of those plants and things like that. But it's too early just now to speak about it. But as I said, just to tell you that even if, God forbid, if Radel doesn't happen, still the investment in a new plant would not be so huge. Mm-hmm. Because it's interior business. In interiors, paint shops are not required. Mm-hmm. So the investment should be not so huge magnitude, is what I'm trying to tell you.
Understood. Thank you, Mr. That's helpful. One related question here. So if we look at the entire FY18, there's almost 4.5 billion plus of new orders that you have got. Can you give us a sense of when should we expect this to start? Is it again the usual 2 to 3 years time between to when we should see this revenue, or is it?
Years. A year and a half to 2 years, but very tough question. As you always make us.
No, I just wanted to get a sense of whether these were incremental orders, and considering that you have so much capacity coming on, is it still coming on the same kind of 2-year time period, or is it coming, kind of later or before? So thank you for answering that. Yes.
What is important for you to understand is that nowadays, just the point I was giving to the earlier gentleman was that, there is a lot of value add that's coming. New features are coming, things like that. So even if the numbers may not go up dramatically, but the value per piece goes up. And for us, we are giving you not the numbers incremental of something, we're giving you the value increase of the order. So, it's not a mathematical equation that, you've gone up by 4 billion, hence 25% more capacity is required. I hope you understand what I'm trying to say. The same part could be, the new model is going to be an incremental, a higher price part, So in that sense, capacity not necessarily is required. It's only when you get a massive order from one particular customer and in a particular geography where you're not there, that's when we have to go set up a plant. For example, if you look at the Kashkamet plant or you look at the Tuscaloosa plant or the Zitlala plant in Mexico, these are plants which have been set up exclusively for the customer in a particular thing. That's why the investments have been very huge.
Understood, sir. Last question from my side. You've spoken about 3CX15, and there's obviously a thought process to try and lower that further. Do these orders that you have got, do these accelerate them in the sense that are they from new customers and or new geographies, etc.? Just try to get some color around this order book or the new incremental orders that you have got.
Sahil, the order could be very diverse. Really, I can't answer this question off the cuff. But if you want more color to it, I think, Gauba, you can kindly...
We will figure out how to disclose it uniformly to all. Because, Sahil, sometimes that too much of a data may only confuse you further.
Sure. Thank you, sir.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Securities Limited. Please go ahead.
Hi, sir. Congrats on good numbers. My question pertains to PKC. In last quarter, we had indicated there are some supply side constraints in PKC. So have they been addressed now in this quarter, or it will take some more time before that gets addressed?
Okay. Pankaj, can you answer?
The challenges are not yet over. The day when we start feeling that the situation is improving, the challenges will still remain, but it's not that bad as it was in that last quarter. So this quarter has been like we have been on tenterhooks, but much better than last quarter.
But it's an interesting point, Dinesh. The key thing to understand is that whenever the supplier is not able to supply these parts, I think what Pankaj and the team at PKC, all of them have been able to do is, God forbid if there is any loss of production or something, to a great extent, whatever overtimes we have to do and all that, we're going to get reimbursed for that. So it is a customer-directed supplier, so we really can't control that. But if given the chance, we have the opportunity to start localizing ourselves because we do a lot of these parts ourselves. So I think it helps the case that Motherson will definitely look at more localization.
Build the case 80%. When you reach, you must expand the capacity.
Yeah, that's true.
Okay, so effectively the margins which have been slightly weaker than the first half, it's also due to the mix changing towards China, or there's something else there?
Yeah, you're right. As you know, in the last quarter we had also explained to you that we started the full-fledged second JV in China, and it's going as per plan. So there is an improvement plan which is there because this was a joint venture with an existing plant which is already in place, and there is an improvement plan which is there for that. So it's running now at good capacity, giving good revenues, but yes, the performance is planned to improve over the next year.
Okay. And by when the third JV start in China?
Yes, third JV has already started as well. So the third JV is equity accounting because we have 40% shareholding in that. And the first two JVs are being consolidated.
Okay. So with 3 JVs, what would be a market share now? With 2, I believe it was about 15% on M&HCV wiring harness.
To be honest, as you know that we are not a market share driven company to that extent, but yes, with the third JV we also support Dongfeng, and so it's expanding to different truck makers in different regions, and mainly the businesses are supplying to the commercial vehicles.
Understood.
The joint ventures are with truck makers, so whatever the model then definitely will come into this joint venture. So you're also gaining on the models that truck maker is making.
Sure. And lastly on PKC, any update on the railroad business, which so Alstom
rolling stock, you mean?
Rolling stock, yeah. Any update on the additional, new customer in terms of Alstom? Have we got a breakthrough with them?
No, we are already supplying the 2 major customers on the rolling stock side, Alstom and Bombardier.
Okay.
So these are the 2 major suppliers, customers to whom we are doing, and in US, the company which we had acquired in Hornell is supplying to other rolling stock makers also, and we are in the process of adding more customers as we speak.
Understood. Okay, great. So thanks and all the best.
Thanks.
Thank you. The next question is on the line of Nishant Vas from ICICI Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So my question was pertaining to SMR. We've already heard from in previous calls that in terms of 2020, when certain car makers are moving into ADAS in a more serious manner in ADAS 3 and 4. So sir, could you give some update as to whether we have secured or we've got some orders in that side from any car makers, specifically in North America, and any color in terms of what content change can happen on that side in SMR?
And Nishant, Vaman here. Nishant, SMR is not catering to ADAS.
Mirrors.
Yeah,
so camera embedded systems.
That's right. So right now in the US, it's still not legally allowed to have cars with only camera systems. We announced in the last call that we got 2 orders from a European car maker and a commercial vehicle to have a camera system that is a replacement for mirrors. But again, the numbers are really small. So as a huge amount of RFQ that's floated in the market, the percentage that are actually camera are less than a fraction. So we're still not seeing that huge wave of change that's really coming. And even with these small, let's say, special vehicles that are coming out with these programs, we are quoting for that. The customer is giving us opportunities to quote, and like I said, we've already won 2 programs. So I think first, a lot of these programs have to go out on the market. The consumers have to be happy and satisfied with this change, and perhaps maybe well down in the future we'll see the big shift coming. So, but right now it's a fraction of a fraction. So and as and when that change comes, we're already ready. So as of right now, at least.
Also in the Tesla case of ADAS, there are some accidents, unfortunate accidents where human lives are being lost, and actually they're having Senate reviews and all that. They're very severe whenever a life is lost. So in that sense, while we're big gainers in this, but I would still think it would be very difficult in this first 5-year plan, this current 5-year plan, for it to really show color. I think it's more of a thing of the future.
So sir, is it right to understand that in terms of camera embedded systems for mirrors, even in North America, the adoption rates will not be significant even after 2020 or 2021?
I would think so, because the of safety and all that, and we assume that everybody's 20, 25, 30-year-old. They're also 60, 70, and as the age of drivers gets older and older, I can give you horrific examples, but including me, I mean, that it's not going to be so easy as what people imagine it to be. But Vaman, you're also getting that kind of thing. They're going to be testing it out.
Yeah, right now, again, I think ADAS really become, and there are different levels, as you know. So level 7, which is completely autonomous, I think that's really a long way away. And again, whatever we're seeing right now is a fusion. So more of camera systems with mirrors in there right now. So for level 7 to happen, it's really a long way away, and we'll probably be able to give you a lot more color on that once we cross 2020 and we see the adoption rates getting higher.
Sorry, Amit, if I basically wanted to know about the intermediate stage, not the ADAS level 7 stage, whether on 3 and 4 are we seeing any major change in that side?
Not for blind spot location, mostly. For that, there is a lot of lane change and all these kind of things they are doing it. But, the key thing, Nishant, that you have to understand is that what you're talking about is to remove a $70 mirror and add a $700 camera onto that. And that price point, it really hurts here.
Absolutely. So, thanks a lot. Thanks a lot, sir.
Yeah.
Thank you. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, just wanted to ask, what was the capex for this year and what is the plan for next year?
Thanks, Puneet. We spent around 3,000 crores last year, which is higher than what we had anticipated. Obviously, BKC came later and there was more growth visible in India. Also, the currency, euro, appreciated towards the end of the year. So these are some of the factors which contributed. Again, largely a growth capex. This year, we should be 1,700 to 2,000 crores, but at the same time, currency is quite volatile. And acquisition also, let's see, once Riddle comes. But Riddle, as you know, is cash flow and EPS positive.
But Puneet should be guiding us on how the currency is made.
On equal side.
No, but he would be. I'm just kidding. Sorry.
So broadly, out of the 1,700, 2,000 crore that you would be spending this year, how much is yet to be spent on the two big plants?
I wouldn't put much over there, but there is some, I don't know, the number would be about $15 to $20 million. It wouldn't be more than that. But I'm just giving you a number off the cuff.
Okay.
Let's look at that and come, because the timing of the cash flows could be different.
Yeah.
You have guaranteed the deliverables and all that. But in a physical construct form, the plant is ready. From a cash flow, timing will depend on the terms of the condition.
We inaugurated Tuscaloosa. The customer was telling us, listen, and the numbers were changed. So I'm just thinking, my God, more this thing. So I'm just because you asked that question, I'm just giving you a number.
We will try to get how we can break down.
So out of the 1,700 to 2,000, you think bulk would actually be maintenance capex?
No.
Growth capex.
In India, we have multiple plants coming. Globally, we have multiple plants coming.
Okay, great. That's all. Thanks.
Thank you. The next question is on the line of Jay Shah from OHM Group. Please go ahead.
Hi, Saigal sir. When I look at your press release and the table on 12-month performance and comparison of the fourth quarter as well, the revenue growth and the EBITDA growth does not seem to translate into EPS growth. Now, there may be short-term issues here, which I understand, but my question is, how important is EPS for you when you keep talking about revenue growth and ROC?
So, in the last 4 years, we've given 3 bonuses. So, I don't know which EPS you're referring to and how you feel about that.
No, I'm talking fully diluted. I'm not referring to bonus. But generally, so as a direction, is earnings per share also a key parameter when you have your business plan? And should we see corresponding increase in growth in earnings per share? Maybe, as a direction over 3 to 5 years. I mean, I can understand the short-term disruptions because of startup cost and all.
Okay. So the thing is, we give you a top line, we give you an FPR, Now you're asking a question more on details and EPS and all these particular things, so I would ask Baba to respond to you. But this thing is very clear. We keep our focus on very small things, which is easily explainable to all our team. So we have a revenue target, we have a growth target, and then we are working together with the finance guys. So Baba, can you take that question, please?
Yeah, I think more than the EPS, because Mr. Sehgal keeps on telling us top line vanity, bottom line sanity, cash in the bank reality. So our focus is more on the generating positive cash flows. For example, take case of startup cost. You could actually take portion of that or full of that to capex and show an higher EPS. But from a cash flow point of view, would it matter to you? I don't think so. Take case of amortization of intangibles, what we are doing. When we have talked about at what price we took PKC, so we have told you and you said this is a good price, bad price, whatever it is a part of life. But when we are amortizing it, we are reducing the EPS, though which is a non-cash item. So it depends what we want to look at. We believe that the return on capital employed coupled with the free cash flow is a good measurement. Confusing people with too many measurements will only confuse the people further.
Yeah, and it becomes very difficult for us to manage also. You see, we have a lot of plants, 250 plants, we have a lot of companies, so to make everybody understand all these particular things is very, very difficult. So we've tried to make it simple. I hope what Gauba has said has explained to you.
Okay, got it. Thank you.
Thank you.
Thank you. The next question is from the line of Hitesh Goel from Kotak Securities. Please go ahead.
Sir, basically, just wanted to clarify, you said that startup cost that you have shown is only pertaining to Hungary and the Alabama plant, right? The other plants which may have startup costs, you're already including in the financials.
No, these are also included in the financials. These are being just displayed for information.
So basically the 60 million euros basically will become almost zero in FY19, right?
See, from a financial EPS or those point of view, these are already charged to the expenditure, added to the expenditure. So when we are reporting any this balance sheet or these results, they are considered. Those are being shown only on a notional basis because some of you wanted that.
So basically what I'm trying to understand, what is the EBITDA margin basically on the SMR PV, because we should exclude this when we are looking in FY19, right? Because your new plants will come in FY19. Or there will be other plants also coming in which may have startup costs. So just trying to understand how it works.
As of now, we are not showing any plants. You know the number of plants we are under implementation as part of startup cost.
Okay, sir. Thank you.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good evening. Thanks for taking my question. Sir, just on the CapEx side, could you tell us what was the India CapEx this year and what are you planning for next year?
I think we spend around 350 crores in India. Rest was outside of India. And again, this year when we talk about 2,000 crores, we are talking about 350 to 400 crores. 350 was standalone. So SMR India is also adding a plant. So it should be in the range of 400. Mate is included in standalone. So SMR, because that's consolidated via SMR PPV. So we will have 400 for plus minus.
Okay. And just on the Mexico plant, would we say that now it has reached optimum capacity utilization level?
No, not yet. No. See, what happens is, some people who know, when we started off the SMR plant in 2009, what happens is the car makers come up with multiple versions of the car. So, for example, you have a 4-door sedan, you have a 3-door, that's 2 front doors and 1 back door. You have that, you have a coupe, you have multiple, you have a 5-door station wagon. There are a lot of versions that are coming out one after the other. So all of them don't happen on one day. So it took almost about 4 years to finish off the BMW order that we had for mirrors, because new versions kept coming. So it's like that. So the full optimum production of a particular plant probably takes about 1.5 to 2 years after the production starts.
Sorry, sir, 2.5 years? So what?
1.5 to 2 years. 1.5 to 2 years after that starts.
Right. Okay, sure. But we are getting to that stage right now for Mexico, right? So that's close. Right. And just lastly, on PKC business, I mean, now that you've had the company for a while now, what do you think, from a longer term perspective, what is the level of backward integration at PKC, and over the next 3 to 5 years, what do you think, where you would like to take it to, and what's the time frame, how you see that? So any thoughts around that, could you share on that?
The PKC has vertical integration in pockets. It is not all around and not in all the regions, and not as in depth as we have. So we are building it up. Already, whatever vertical integration was there, we are improving it, and we are getting the benefits out of those. Plus, we are going to expand the vertical integration in the company. So some portion of vertical integration is there in the North American side, and more vertical integration is required on the European side and the other regions.
So, for example, the wire division of Motherson Sumi is working together with the wire division of PKC. The component division of Mate, Smile and Muscle are working together with the component division of PKC. So what are the needs that are there, what to upgrade, whether we need new plants, all these particular things, decisions are being taken as we speak. So it's a continuous journey. It will take us 2 to 3 years, but in those 2 to 3 years, we will be bringing PKC onto almost at par with all our wiring harness companies. Something like what MWSI, if you remember when we took it over, it was very bad shape, and today is one of the best parts of Motherson Sumi growing all over in the US and Mexico and everywhere.
Right. So if I got you correctly, you think that in 2 to 3 years' time, you could see the level of vertical integration for PKC being at the same level as what Motherson is today on the wiring harness side?
Absolutely. Probably a bit better, because they're also into electronics. Pankaj, that was a Pankaj.
Yeah, that's true. Doing some very high-level work also, which is being done in-house, that we do make a lot of junction boxes. So most of the trucks which you will see in the West and also in Europe, we do that work internally. And we are building up more and more vertical integration capability. So there, as I mentioned, there were in pockets even jigs and fixtures manufacturing. To some extent it was there, but it was not as expensive, and the value was not understood, which after visiting us and understanding what we are doing and how the value can be created, much more everyone is aware. So they are focused, and teams at different levels, as Mr. Sehgal said, whether it's wire, whether it's components, whether it's tooling, or it's jigs and fixturing, at every level.
Electric buses, they are doing a lot of work on electric buses. They have regular models which are already being supplied. We've actually got the orders from around the German bus makers for electric buses.
That's true.
So what I'm going to say is that there is an all-around growth. It's not just that we are teaching them; it's also PKC teaching us. So for us, that's the real win-win of PKC.
And even to the level of IT integration. So we have teams today from the ID side. We have teams from Europe who have been here means from China coming. So all the areas are being covered so that we have an extensive one team all across the world.
Right. So that's very, very helpful. But, just to quantify it a little bit in terms of just to understand what is the difference of travel here. Would you say that they're currently at like 50% of what Motherson is doing in terms of vertical integration or even lower? Just to get a sense.
Lower.
Lower than that. Okay, sir.
15-20%. I don't know. Again, it's an off-the-cuff number. So maybe 15-20%.
Oh, wow. So, okay, sir. That's very helpful. Thank you so much, sir.
Thank you. The next question is from the line of Prateek Poddar from ICICI Prudential AMC. Please go ahead.
Sir, two questions. Actually, three questions. One is, could you just help me with the cash flow from operations this year? Motherson as a group, how much cash flow from operations have we generated? Broad number?
I'm sorry, I will like to disclose the cash flow uniformly to all, and I don't have that number immediately with me here.
Not a problem, sir. Not a problem. But broadly, PAT plus depreciation plus amortization, broadly that, or there could be increase in working capital is what I was looking for.
We have published the balance sheet, so there is it requires a bit of a work, but cash flow is ready, so I have to figure out how to disclose it separately before the annual report.
Understood, sir. Not a problem. So second is, how much would be the maintenance capex out of the 3,000 crores, which you talked about for this year?
I think the capex is to be divided into the different blocks. SMRP BV will be making presentation tomorrow, so we will have a good sense. Almost 60 to 70% historically until 9 months is on the growth capex. Tomorrow we will see their latest number. India has been largely a growth capex coming for the land and building of those because the equipment relative to the land and building cost is much smaller. And then there would be some capex at PKC, which is more on the improvement or on the balancing side. So there will be more capex towards the growth and a bit of a portion for SMR on the new paint line in Hungary or PKC, which would be more towards the improvement projects.
Understood. And sir, out of the 1,700 crores next year, broadly, can I assume that 30% would be maintenance and the rest would be growth? Or the entire 1,700 is growth next year?
No, I think 20-30% will always be maintenance capex, or because all said and done, we need to replace the computers, laptops, vehicles, of course, go into the lease rentals. Otherwise,
Sure, sir, sure. So just one more question. You talked about order book accretion more more so from value rather than volumes. So whenever this goes into production or execution, it is fair to assume that your ROS will improve because there's no capital employed additional capital employed won't be required, and the value add from Motherson side would be higher on the new order. So the ROS improvement should be material once PC execution, whenever it happens in the next 3 years.
Absolutely, sir. You've answered, helped me articulate. I couldn't have articulated it better. Yep, that's true. If we don't set up new plants, then the road gets to heaven, and that's where we want to be. I want you to be.
Great, sir. Great. Thank you so much, sir, and all the best.
Thank you. Thank you so much.
Thank you. A reminder to participants, anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Joseph George from IIFL. Please go ahead.
Thank you. This is Joseph from IIFL. Just one question. In your presentation, you mentioned that the impact of euro on the euro appreciation on the SMR revenues was about 26 million. Is there a similar indication that you can give for the impact of decline in volume seen in Hyundai and Kia?
Sir, currency is easy. What you take the factor used in the same period last year and use it to the local currency revenues. But, otherwise it will be very difficult to map it to the customer models and to get to that.
Or on the other hand, would it be possible to just give a sense of how big are Hyundai and Kia for you in within SMR? Just to get a sense of how much the impact would have been.
Tomorrow, I think when you will see the SMR PBV numbers, they will tell you how big the customers are in their cars. I think they will because. See, we've tried to explain this again and again, but people don't remember it. They only look at the numbers. Our job is to go for 3CX15 to de-risk our business, which is no country, no component, no car maker more than 15% of our turnover. But in some customers, in some companies of ours, are having a bigger share. So that will be disclosed, I think, tomorrow. You can do that. Or if you can't find that answer tomorrow, you can get in touch with Gauba. Gauba will try and help you out if you can.
All right. Thank you.
Thank you. The next question is from the line of Rajesh Kothari from Alpha Accurate Advisors. Please go ahead.
Good evening, Chandra.
Good evening.
Two questions on my side. One is, I joined a little bit late. Sorry if I'm repeating the question. In terms of the content per vehicle, would you like to give some color that, over last 12 months, how the content per vehicle has gone up? Second question is, in terms of the emerging trends in the global automobile industry and global auto ancillary industry, any interesting insights which you would like to, some share so that we can get some better perspective on the things recently, for example, the reduction in import tariff by China. So, a lot of things are happening. So if you can share some insight, that will be really interesting.
Okay. First of all, the ability to project trends and things like that, I do not know where I can find the time to look at all those things. We are extremely busy looking at what the customer wants. The ability of a particular country to reduce the tariff, increase the tariff, what's going to happen over there, really I can't tell you much. What's exciting for us is that there is tremendous amount of, if I can use the word, cats amongst the pigeons, because, people are very, very worried about the electric vehicles, ADAS, and, all these things are happening. I can't, for the life in me, figure out how that will play out in the next 2-3 years. So that is putting a lot of stress onto a lot of the vendors, which are, in some of the cases are good vendors, and they want to quit, they want to get out, so the car makers are asking us to look at them. So for me, it's an opportunity. I don't know how you would look at it, but definitely we are seeing a little bit more stress in the system because people are wanting to, they think there's a disruption around the corner. According to me, you see, recently the cobalt prices, everybody told me would come down. They've actually gone up. They only got trebled. Lithium prices have gone almost double. So everything is telling the other way as to what people are telling me. So I'm a bit surprised why they can't see the trend. But on the automotive side, we've hit a new high, almost close to 100+ million. So, electric cars are still less than 1 million. So, everything is telling me that we are in the right direction. We are moving in the right we just have to be persevering that, just in case if the car makers will give an option, then we are ready with the technologies and things like that to take care of that particular trend. And I'm happy to report that all our engineering centers, our advanced engineering people globally are working towards this trend. They are doing it otherwise, not just for electric vehicles. We have to, nobody is looking at the Euro 6, which is going to come, or the Bharat 6 that's going to come. That will need the reduction of the weight of the car, otherwise the penalties would come in. So we are working very hard towards that, and luckily for us, both of them are complementary. I mean, the electric vehicle side and the Euro 6 side, both are complementary. So as I tell my team, you have one effort, but you have double benefit.
Thank I see. And content per vehicle?
So content per vehicle, very difficult to, quantify which cars, what content per vehicle and things like that. But yes, as we go into new products, there is cross-geographical selling, there is cross-customer selling in the same country, all the customers are then getting into those particular products also. So yes, the content of cars definitely is going up, but very difficult to quantify, Rajesh. Very difficult.
Sure. My last question is, over next 2 to 3 years, any major, what I would say, challenges which you think which may come up as a risk factor?
Not to my knowledge. I think one of the key things about Motherson's way of thinking is there is no drop-dead kind of a risk in our business. Everything there's a time available for you to respond. There are a lot of things that you can do to mitigate that. And really, I don't see any risk which I can say is coming out of the blue or something like that. All the risks that you're looking at, I'm also looking at it in the same way. I don't see anything that tells me that there's going to be a huge impact.
Great, sir. Thank you very much.
Thank you
very much. Wish you all the best.
Thanks.
Thank you. We have a follow-up question from the line of Mayur Parkeria from Wealth Managers India Private Limited. Please go ahead.
Thank you once again, sir, for taking my questions. Sir, in the last 5, 6 years, 7 years, we have concentrated on acquiring manufacturing plants and companies and products and geographies. Do you see any, as we go ahead, EV disruption is one side, but even existing cars seeing more electronics and more automations in respective parts. Do you see any case for that you will need to increase capability on the IT engineering and hence may have to acquire on the technology and IT side, engineering side, that side of the business?
Mayur, great question, but it appears that you are not familiar with Motherson very much because, our vision is very clear. Our vision for the last 21 years has been to be a globally preferred solution provider. So that actually, we don't think what has to be taken over tomorrow. It's the car makers who are telling us what to take over. And in that sense, that's the reason why Motherson's acquisitions of all the things that you said are very, very successful. So think about it like this. If the car maker tells me tomorrow to acquire an IT company, definitely I will tell him, look, I already have one, which is an SEI CMM level 5 company, but if he still wants me to go ahead and acquire another one and he's footing the bill, why not?
Okay, sir, I got that. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vivek Chand Sehgal for closing comments. Thank you, and over to you, sir.
Okay, thanks again. I think we tried our best to answer your question. The growth of Motherson is totally at the wish and will of the customer. We are very lucky that we have a very good performance. Already in this particular year, we have picked up almost, from every customer, we have picked up a huge number of awards as the best vendors and things like that, which is very heartening because it tells us that every unit is moving in the right direction. Our target seems very difficult at this particular moment for some of you, but I would like to take you back in 2009 when the Lehman crisis was on. Everybody said there is no way we were sitting at about 4,500 crores. Our target was 10,000 crores. And then in the Lehman crisis, we acquired SMR. That brought us back to 10,000 crores. We acquired the company for a very good price. So there are a lot of opportunities that are there, a lot of things which are there, but Motherson will never acquire a company where I cannot see 40% growth being delivered. We had a lot of things coming in the papers. 2016, IAC was $6 billion top-line company. Bosch was another $1.5 billion. So I can give you umpteen examples where Motherson has not gone forward just because it can't see the bottom line. So all I want to reassure you is top line, vanity, bottom line, sanity, cash and bank reality. Thank you very much.